Mark Suhr from Lichty Insurance, right here in beautiful downtown Seward, Nebraska. And I've been doing crop insurance since the 80s, since it actually originated. My father was on the commission for the modernization of crop insurance back in the 80s and spent a lot of time with the then Secretary Clayton Yiter developing the program and modernize kind of what we see today. But today I kind of want to just visit with people about grain sorghum. And as you know, grain sorghum is a crop that kind of, and honestly, fell out of our favor in this part of the state because of the other development in the hybrids of crops with more tolerant corn. But again, grain sorghum is a great option. So what I've noticed over the years is we've insured a lot of grain sorghum. It kind of shrunk back a little bit, but all of a sudden we see the price demand on grain sorghum and its ability to do things that other crops can't do. It makes it kind of a good option for people. So one of the things I always like to point out to my producers is that you have to consider the benefits of grain sorghum. So I look at, grain sorghum, of course, as we all know, has lower input costs. It's definitely a lot cheaper or less expensive to insure. And we know grain sorghum is weather tolerant to drought, wind, and hail, et cetera. Don't get me wrong, grain sorghum has its point when it's in the final stages that it's more susceptible to hail and wind. But during the growing season, it's pretty much like a grass. So that's also then why the rates are so much less, because so much less volatility or damage that can happen to it. I just looked up today on corn prices. So right now in our local market in Tamora, Nebraska, the cash price for corn is trading at $5.06. And you compare that to grain sorghum. Grain sorghum right now, local market is $6.05. So it's $1 more a bushel than corn is. So that's another incentive, especially on the dry land side, if you're looking at it. Then you look back further into the season in October, the price kind of narrows. So there's only a 50 cents difference for an October delivery for the cash price at the local market. So grain sorghum's still at $4.67, corn's down to $4.12. But I don't know with the new administration how prices are going to do, or the new markets for overseas, how that's going to impact the grain sorghum. But there's definitely high demand for grain sorghum right now. One of the things we always find out in our area too is that other crops can fail. So you might have the best intentions, and we're a great hybrid seed corn area, and it happens every year that we have some weather event that causes the seed corn crop to fail, or the seed corn company to abandon the crop. And that's kind of devastating for some of the producers, because all of a sudden they're counting on that high dollar revenue crop to be planted. All of a sudden they find out that the seed corn company says, well, I'm sorry, we're abandoning the crop. We're not going to do it for you, but here is a bag of grain sorghum as your consolation prize, and feel free to plant that, and we're not going to pay out on your contract anymore. So that makes it very tough. So that's where we've seen some guys then go and plant grain sorghum and do it very successfully. But you have to look a little bit ahead. So we've had other crops fail too, corn and soybeans and wheat also fail. And so it's a good as kind of a replant crop or backup crop. Now, don't get confused with crop insurance. When you talk about replant means replant to the same crop. So if you have a corn failure, you're going to be expected to replant to corn. Soybeans, the plot's going to plant to soybeans. But seed corn doesn't have a replant option. So when you're going in and talk about replanting seed corn, it doesn't happen. You have to go to ultimate crop, because there's no seed corn replant provisions in the crop insurance. So, and you also have a prevented plant situation. Grain sorghum has the farthest planting date out there. So grain sorghum, the final plant day for grain sorghum in our county is June 15th, and the actual end of the late planting period is actually July 10th. So we do have producers that can plant after June 15th and still get coverage on their grain sorghum. Another option that people might want to keep in mind with grain sorghum is its consumption for their own farm operation. Maybe they have a need for that feed themselves. So, keep grain sorghum in your mind in the future. So the issue with grain sorghum, though, is you have to kind of plan ahead. So you'll find a lot of producers might not have grain sorghum on their current policy. And grain sorghum now has expanded to additional counties out there as well. So if you look at grain sorghum as a new crop to your farming operation, keep in mind, crop insurance, you only pay for planted crops. So the main thing you have to do is we have some deadlines coming up here. So March 15th is the sale closing date for you to make your selections for all the crops on your crop insurance policy. So at that time, you're selecting the counties, the crops, the levels of coverage, and your coverage options. And the coverage option would be like for revenue protection or bushel protection. So the thing is, and then also when you're adding crops, be sure to report your projected acres. So even those you might not have anything for grain sorghum going forward, go ahead and just report it. So then after you get those selections made, then you have a period to establish what we call a history for yourself. So if you never planted grain sorghum before, you have what we call a T yield that they will be assigned you for crop insurance. For example, in Suhr County, the T yield for dryland grain sorghum is 103 bushels. And on irrigated grain sorghum, it's 128 bushels. So that is the establishment for then what you're selecting for your levels of coverage. Now, keep in mind that a lot of people have had grain sorghum, especially in our area in the past. So it's not been planted last for years, but it is in your entire farming operation. If you had grain sorghum, you need to dig up that history. If you fail to dig up history and it gets discovered that you had it in your history, they're automatically going to whap you with a yield that's 6% of those county yields I just mentioned. So it's quite a severe penalty if you don't come up with the history that you actually had, because they're wanting to make sure what you had. Again, crop insurance is based on the yield that you developed as a farmer and the yield the ground has developed together. So that's what yields they're wanting to dig up. And also we can have them happen, I've seen with producers too, be careful when you get married. You know, you might be your new spouse might have been involved in a farming operation, had grain sorghum, or you might find out that someone that you're now in partnership with might have had something for grain sorghum in the past. So that is why they need to check that out as well. So the issue with grain sorghum currently is, you know, we're familiar with corn and grain and soybeans. They have established prices on the Chicago Board of Trade. So crop insurance uses some averages to develop what they call the spring price or the initial price, and they also have the harvest price. There is no December grain sorghum market to track off of, so it's kind of been just assigned a yield based off of a corn yield. So for example, say if December corn during the month of February ends at $4, they're going to assign a yield for grain sorghum for price purpose of 95% of that number. So right off the bat, you can see there's always a 5% difference in the crop price per bushel for grain sorghum versus corn. But the problem is, like I mentioned earlier, we're seeing a dollar difference in the local market currently today. So that is an issue that you can, we'll talk about it later, that you can fix with some additional crop insurance supplements. So another thing about grain sorghum is, since it doesn't get very volatile toward hail toward the end of the season or wind, it's supplemental hail coverage and wind coverage is rather inexpensive for the crop. So that's a nice thing about it as well. So let's talk about just a brief product today, and there's a lot of different products out there that companies offer, but here's one solution that a company has, and just visit with your local insurance agent to talk about it, some options if you're thinking about grain sorghum. Again, the main thing is get grain sorghum added to your policy, work on develop a yield. If you don't plant it, fine, but now you have a safety net behind you if you do end up having to have grain sorghum in operation. I want to put grain sorghum in operation for a financial consideration itself. So one of the kind of neat products they have out there now is what they call an additional bushel price option. This company's called theirs APO. And what it does is it supplements the revenue-based or the yield-based crop insurance policy and provides you extra dollars of coverage. So the downfall is it's actually just a bushel loss product, which means that you have to suffer a bushel loss for it to pay. Whereas a revenue product that for multi-peril has another component of revenue as well as whether that would elect to make it have a loss deal. On these products, you can do just your dryland crop or your irrigated crop. You have some opportunities to make that selection itself. So the thing about these additional price option products, they typically have the same sales closing date as traditional crop insurance. So it's March 15th to the date. Again, if you insure this product and don't plant grain sorghum, there's no cost to you to do it. It's just based on planted acres. So how do they establish the prices for this? So as far as what's available. So it's based on what level of selection that you select for your underlying crop insurance coverage. So if you look at this example here, you have corn, grain, soybeans, and this product's good on all of these crops listed here on the side. So if you select a 75% level coverage in your operation, you can then elect from that spring price we talked about up to 33% of the spring price as additional price ups, which actually is over $1 more for coverage. So if corn tracks at just round numbers, say $4, that means in grain sorghum is now 85 or 95% of that, so it's like 3 something. You can then buy 33% for a price option in addition to it. So you can pick any percentage up to that number, of course. So it could be 10 cents, could be 50 cents, could be $1, $1.20 or whatever, based on what level of coverage you have. So the nice thing about that is then it gives you the extra leverage if you do need to work with your financier, your banker or whatever, to determine for insurance purposes what kind of guarantees you have for what kind of loan, then you can have, it's kind of a good idea, have some extra coverage out there available. So it's kind of just briefly talk about how a loss example would work. Now this loss example here just talks about probably a corn crop, because you see by the bushel amount. So we're going to start off by what we call the unit guarantee, and this is on a farm level. So it's not the whole entire operation. It's this one. It's based on a farm level. So for example, if you had this maybe a 200 bushel corn average and you're buying the 75% level, your guarantee would be 150 bushels an acre. And so now we know what the bushel guarantee is. So now we go to the crop season, all of a sudden we find out at harvest time we've had some events on the farm, and all of a sudden we turn up with a yield of 116 bushels. That's actually what you do harvest. So just doing some basic math from the federal crop insurance side in this example here, if you take the 150 bushel that's guaranteed, you only harvested 116 bushel, that gives you a 34 bushel loss. So then we go back and check that harvest price again, which again, based if you bought the revenue product, that price could change, could be higher. But then you take that 390 price times the bushel loss, and that gives you $133 of actual indemnity. That's what your crop insurance is going to pay you. Now, if you did buy this additional product, and it's based on what kind of dollars you want to buy on a percentage, but in this case, we have 60 cents as an example for additional price selection they selected. So we're going to pay you another 60 cents on those 34 bushels, which is going to amount to another $20 of indemnity. So that means that on 133 bushel loss, I'm sorry, $133 plus the $20 APO, which is additional price option, is going to pay $153 of indemnity per acre, with a breakdown of 133 coming from the federal crop insurance, another 20 coming from the additional price option. So again, it's a way to supplement, kind of overcome what the markets are doing currently with grain sorghum to give it a solution. So if you're worried about planting grain sorghum because you're worried about you can't get the right crop insurance for it, this is a good solution for you to kind of take a look at, because that extra dollars can maybe help you with your decision. Again, lower input costs, drought tolerant. I still look at the drought monitor every week and I see that we're still in a drought area, and a good portion of Nebraska is in a drought area. And grain sorghum might be a good option for people to plant this year rather than corn. So I don't know if there's any other questions, Nate, that you have, or want me to summarize anything better. So I will stop sharing my screen here.
Which was great. Mark, one thing that I'd like to share with the folks watching this video is that we're actually doing some work with our congressional delegation and the House Appropriations staff and the Risk Management Agency to reevaluate, some recommendations for crop insurance in regard to sorghum in the next farm bill. So I can't get very far into the specifics for that, but it's definitely something that we're interested in looking at, and currently working with the federal delegation on that. So, and as you mentioned just a moment ago off camera here, that farmers can actually use their own yields if they have them, rather than the T yields. Is that correct?
That's correct. So if you do have some history of grain sorghum on your farm and it's higher than the county yield, so keep in mind, so they're going to look for an developer yield 4 years of average with a maximum of 10. So if you have 4 years of grain sorghum history in your database, you get to use that 4 years of history to establish what your basis for your yield are. So if that is a 1/5 average for 4 years, that's what you get to use. If it's 160, that's what you get to use, which is nice. But those lower numbers are just the numbers used in case you don't have any yields and no previous history that you can use, and that's what you're stuck with initially.
Let me ask you this, Mark. For those of us who maybe have farm ground, or a generation ago, our parents or grandparents grew sorghum on the farm. Um, where would we go then if we wanted to plant it now to find records of that, considering that history doesn't go away?
That's what can be tough. So because what's happened is some people have taken grain sorghum off their policy. As long as you maintain grain sorghum your policy, your crop insurance company is going to maintain and keep that history for you. So if you've taken off the policy, you can look at old records to see if you had it on a crop insurance policy. If not, you're just going to have to go out back and dig up some FSA records, which show planted acres, and then go back and look at your sales records, so what your elevator receipts were for those years, and do some easy math. 100 acres times so many bushels, and that gives you your average yield. But,
and given that sorghum technology, sorghum hybrids have evolved over the years and yields have increased, could it be feasible that maybe those yields from 30 years ago would actually be lower than the T yield, and they'd be better off looking at what's on file for the county?
yeah, and there's some other things out there, and I'll do some more specific. So in the corn world, I believe they now do it in the grain sorghum. There's what they call a trend yield. So they are acknowledging that hybrids have gotten better. So what they'll do is when you plug those numbers into your database, specifically for corn, and they now have, I believe, available for milo as well, and say maybe that yield from 10 years ago was 110 bushel, they're going to give it a factor based on what the current hybrid would be. So that they might take that 110 and substitute it with a 120 bushel, for example, taking the fact that had you had today's market, because that's what was happening was as technology, as far as yields exploded, those 10-year averages were depressed because they weren't reflecting what the modern corn was doing, especially with people that are doing a rotation in their farm, and maybe someone is doing a rotation between corn and grain sorghum. You could have a 20-year-old grain or 20-year-old corn number in your average. Well, we know corn raised 20 years ago was a lot different than corn raised today, and that's what that was to address.
Right. And one plug I always like to make to our folks that are in corn and soybean rotations is that, adding sorghum to that rotation, we know from data collected at K-State that you can see an average increase of about 8% yield in corn and soybeans following sorghum in rotation. So a lot of opportunities there. So, well, Mark, again, I just thank you so much for sharing your expertise with us, and personally, I thank you for your friendship. And certainly we look forward to continuing to work with you here in the eastern part of the state.
Oh, we appreciate it too, Nate, and appreciate what you're doing for the grain sorghum and all those other things you do on the side as well. So you're a great advocate for the farm world, and we could use more like you and all the other entities out there. So appreciate it much.
You're going to make me blush. But Mark, again, thank you so much. I appreciate it.